Did you know that real estate investing is just not about passive income? Real estate investing can really help you out from a tax perspective. That is why in this video, I am going to be breaking down the 5 tax hacks that you can use when it comes to real estate investing. But before we jump in, I'm gonna need you to like, comment, and subscribe so you don't miss out on any of this wealth building information. Now, let's get after it. One of the hidden tax breaks of real estate investing is depreciation. Depreciation allows you to write out the cost of acquiring your property over time. Typically, residential real estate is written off over 27 and a half years. And it is a tax deduction where you don't actually have to put out an expense. It is called a phantom tax deduction. It is one of the biggest benefits of owning real estate. And you want to make sure that you are depreciating your property properly. Real estate allows you to defer taxes. That happens under Code Section 1031, where you can actually buy a piece of real estate. It can go up in value. You can then sell it and purchase an equal or higher value piece of real estate without paying income taxes. The key is to make sure you do it specifically under Code Section 1031 so you don't get hit with capital gains taxes. This is where when you're thinking about leveling up to your next level of real estate, you can do it tax-free, and it's one of the many tax hacks that the wealthy use to grow their portfolios and to stay tax-free. Mortgage interest is another great tax break when you're purchasing rental real estate. The mortgage is deductible. That is the amount of interest that you're paying on the loan. When you have rental real estate, you can take a full deduction of the mortgage interest that you pay. There's no limitation on the amount of mortgage interest like there is on a primary residence, limiting to you at only $750,000. That mortgage interest will lower your taxable income, therefore reducing your tax liability. All the operating costs you have when you own rental real estate is tax deductible, specifically real estate taxes. Real estate taxes are the taxes you pay for the ownership of the property that you hold to the county that the property is located in. When you pay your real estate taxes, you're able to take that deduction against the income on your tax return, the income that you acquire from your rents. All your operating expenses are always going to be deductible, even if you have a vacancy. So make sure that you deduct your rental real estate property taxes. A real estate professional is one of the best strategies you can employ to be able to reduce your liability when you own real estate. A real estate professional is not somebody that has a real estate license. It's not somebody that is selling real estate. A real estate professional is an individual who has invested in real estate, and they spend 50% of their time in real estate activities. And when you do that and you're materially participating, you're able to write off all your real estate losses against any other income on your tax return. So imagine if you own real estate and you have all of these losses because of depreciation and you have other income on your tax return, that depreciation, that mortgage interest is going to add up and offset any other income on the tax return. As a real estate professional, you need to make that election on your tax return so that the IRS knows that you are qualifying yourself as a real estate professional. A lot of tax professionals don't know about this sneaky little trick under Code Section 469. So make sure that you elect real estate professional status if you qualify so that your passive losses can offset all the other income, whether active or passive, on your tax return. Real estate isn't just about buying and holding. Real estate is really about accumulating wealth, and having a flawless tax strategy. When you own real estate, you get the benefits of being able to write off depreciation, being able to write off your real estate property taxes, being able to deduct your mortgage interest, and any other expenses that you have associated with real estate. It is one of the greatest opportunities that are out there, and one of the reasons why the wealthy continue to become wealthier. If you're thinking about growing your wealth and you want to lower your taxes, real estate is the place for you to be. Tax planning is such a key component of your overall financial picture, and investing in real estate is one of the ways that you can reduce your overall taxes. So now that you understand the benefits that real estate can give you from not only a wealth accumulation perspective, but also from an income tax lowering perspective, it is time for you to go out and get after it and start investing. But now you know exactly what you need to do. So it's time for you to also like, comment, and subscribe so you cannot afford to miss out on any of this wealth building information.